I think this session is going to be chock full of really practical, helpful, actionable information. So without further ado, please join me in welcoming our presenter, Cheryl Bean.
Hi, good afternoon, everyone. It's Friday and it's 2 o'clock, so I really give you guys a lot of credit for hanging in here on audits because it's not always the most fun conversation to talk about, but we will have a good time this afternoon. So just a really quick disclaimer, my session here today is meant for general and educational information. I'm not here to give you general advice about your specific organization. If you want to talk afterwards, I can maybe guide you in some directions, but this is meant for more general information. Okay, just a quick review of the agenda for today. What is an audit? Different types of audits. Do I need an audit? If you're not quite ready to undertake an audit, what are some other options? And then we'll spend most of the time going through the audit process. Just really quickly, can you tell me if you've never been through an audit? Fantastic. Okay. What is an audit? Most of the conversation today will focus on a financial audit. It's a formal review of your organization's financial records. A formal review meaning that it's done by an outside independent CPA firm. What does independent mean? Independent means that it's not somebody on your board, it's not a major donor, it's not your neighbor, it's not somebody close to you. They have to be able to give an independent review of your financial records. And audits always conform to GAAP, generally accepted accounting principles. Some organizations, especially when you're small or maybe just getting started, work on a cash basis. Audits must be done under generally accepted accounting principles. Why is an audit important? Audits can help identify inefficiencies and in the same way help to improve operations. Audits can help your organization prevent fraud. A common misconception about audits is they don't always detect fraud. If you're concerned about something, it's really important to talk with your auditor up front so that they can start digging a little bit deeper. They will have their processes that they have to go through, but it might not uncover something if something is happening. And audits might be important for an organization who's doing grants or funding of some sort. I'm sure you've all seen that in your request. Please send us your most recent audit. So, a couple different types of audits. You have internal versus external audits. Internal audits are just that. They're conducted by internal staff. They're usually larger organizations. This is just meant to show you the different types of audits. I'm not suggesting that you should go through any kind of internal audit. They can assess internal controls, risk management, and governance processes, but it's an assessment of those. An external audit is performed by independent auditors. Again, they're not internal. They are external CPA firms that are coming in to do a review of your books from an outside perspective. They provide an unbiased opinion on an organization's financial statements, which we talked about, and they do review internal controls, risk management, and governance practices as well. Different types of audits. Again, the type that I will spend most of the conversation today talking about is a financial audit. There's also IRS audits, which I'm sure you've heard about. Hopefully nobody's had to go through one. I've never been through one, but I'm sure it's a very lengthy and extensive process. Other types of audits that you may have to go through, a work comp audit. I know in the past I've had to do an annual work comp audit where you just have to send in some information to the insurance company, and they're pretty simple. They're not real invasive and that sort of thing. Financial audits can trigger other types of audits. For example, IT is a pretty common one. IT is becoming a much bigger issue for organizations with cyber attacks and whatnot. So a financial audit can trigger some of these other things. For example, payroll. If there's some inconsistencies in your payroll or something like that, they could come in and do a payroll audit or might recommend one. Do I need an audit? There are several factors to consider when you're looking at, should we undertake this process? What's your budget size? There's no IRS requirement that says you must do an audit at X point. some general guidelines. If your organization's probably in the 500,000-ish budget range, you might want to start thinking about that or having some conversations with your boards. Revenue sources. Are you having multiple and more diverse revenue sources that you want to take a closer look and just make sure that everything's being categorized correctly? Staff size. If your organization is growing significantly, you're taking on more locations, your staff is growing significantly. Some of those things kind of go together. If you're increasing your staff size and maybe taking on a new location or something like that, your budget's probably increasing, your revenue sources are probably increasing, and that sort of thing. So some of these kind of go hand in hand. There are some states that require audits at certain points. Those are usually state laws, though. Like I said, every state's different. If you have questions about where you're at with the state of Kansas, it's always best to check with a CPA firm or your legal counsel. Some grants or funding will require an audit. For the IRS, with the federal government, if you have, I believe it's $1 million in federal funding, which is a pretty large amount of money, they will require you to have an audit. But you're probably getting close to that point if you're not there already, just because of the significant amount of money that you're managing. And maybe you want to take on an audit because you have some organization risk. If you have concerns about what's happening in your organization, or any reason where you're concerned about what's happening, that could be another factor. Okay, so you're applying for a grant. They ask you to submit your most recent audited financials, your 990, et cetera, but you don't have one. What else can I do? There are different levels of financial review. The financial audit is the most extensive. It takes a look at a greater part of your operations, your governance practices. They're going to do more testing and that sort of thing. A financial review is the next step down. Again, it's still performed by an outside audit firm, but there's less assurance that your statements are going to be free of material misstatements. A material misstatement is something that if somebody were looking at your financials outside of the organization, would it change their opinion if something were incorrectly stated? For the most part, a $500 misstatement isn't going to change somebody's view of your organization if you're a $500,000 budget. But if you have something that's maybe been miscategorized or something, and it's, say, a $10,000 difference, that might be more material if somebody would have a different opinion of the financial health of your organization. In a financial review, they do not look at internal controls. And internal controls, especially for a younger, newer organization, are very important. The next step down, and it is important to know too that a financial audit is going to obviously be the most expensive. It's the most time intensive, but it's going to be the most expensive. Financial reviews cost less. And then a compilation is even going to be less, but it's also going to have less time involved and less oversight. So a CPA firm is going to take your financials that you present to them. They're going to review them. They're going to look for major issues. They're not going to do transaction testing. They're not going to look at internal controls. And when I say transaction testing, in an audit, they're going to come in and look at specific transactions. I want to see this invoice. I want to see this payment. And then they're going to go through things like that. Those don't happen in a compilation. Okay, so maybe I'm still not ready to do either of those things, but I need to show a funder that I can take on these funds and I'm ready to do this. Most likely your organization is preparing financial statements. It's really important that your board or finance committee are reviewing those on a regular basis, whether that's quarterly, probably not monthly, but possibly monthly, but probably no more than on a quarterly basis. Do you work with an accounting firm or outsource bookkeeping? Not necessarily from an audit perspective, but are they helping you with setting up your transactions and an accounting software and that sort of thing? If you have that outside expertise, that you might not have on staff. Those are things that funders might look for as well, just to make sure that you can demonstrate that acumen of understanding your financials and making sure that they're prepared appropriately. Before I go on, are there any questions? Oh, I'm sorry, we're going to wait for the microphone because we're being recorded. I should have stated that up front. We're being recorded, so.
Yeah, my question is, did you recommend quarterly reviews, like during a board meeting, of quarterly financial statements, and that being sufficient or adequate, as opposed to a monthly financial statement where they're reviewed every month? So you're saying quarterly is sufficient?
I think from a funding perspective, to show that you have control of your financial statements, that shows a funder that you have appropriate oversight and review. Your board might meet monthly, your board might want to see those financials monthly. There's no reason not to do that, but from a funder's perspective, I think most would say that quarterly is sufficient to show that you're doing what you need to do.
Yeah, you're exercising that fiduciary responsibility as a board.
Exactly, exactly. Thank you.
So I've heard the word internal controls quite a bit
Sure.
the last couple of days. So could you explain that more? Go into some detail on that, please.
I will be happy to. Do you mind if we get to that part of the presentation? Because I talk about that a little bit more, and then if you have a specific question, can we come back to that? Terrific, thank you.
I have a CPA that does the accounting. Can the CPA also do the audit?
If they are doing your accounting from the perspective of the day-to-day, so to speak, no. It has to be somebody independent because they would be auditing their own work. You might be working with, they're taking on the role of a staff member at that point if you don't have it internally handled. So,
Thank you.
you bet. These are great questions, thank you. Okay, so what happens during an audit? They're going to review your accounting practices. Who's in charge of the accounting software? They're going to go through, and this kind of goes into internal controls as well. They're going to go through your mail opening process. Who opens the mail? Who routes the invoices that come in? Who has check writing, like what's the check writing process? Who has access to the checks? Who's signing them? Who's even mailing them? Some of these things have changed over the last several years with invoices coming in via email, online banking, and that sort of thing. So if your organization's at that level, they'll go through that process as well, making sure that there are at least more than one person involved in the process. From an internal controls perspective, you want to make sure that one person doesn't have too much control, because that's where you can start to have issues, fraud, those types of things. If they can process an invoice, write the check, sign the check, and mail the check, you're just setting your organization up for possible issues. They're going to evaluate financial reports. They're going to look at bank statements. They're going to look at your balance sheet. They're going to look at your fixed assets and depreciation schedules. This is not an extensive list by any means, but they're going to come in and look at all of your reports. In addition to the internal controls review that they'll look at other things beyond invoices. For example, payroll. Who has access to payroll? Who can approve payroll? What's that process look like? Who can approve raises or changes in payroll amounts and that sort of thing? So again, making sure that one person doesn't have too much control over too many things within the organization. They're going to review policies and procedures. Again, this is kind of, I kind of touch on IT a lot. IT has become such a big issue. Do you have processes in place, like, for example, changing passwords? They're going to ask those things because it puts the organization at risk if you don't have those policies and procedures in place to protect yourself. And then they'll make adjustments based on generally accepted accounting principles. Those, you should expect some adjustments at the end of your audit, as long as there aren't too many. I think you should expect those. Does that answer your question on internal controls? Thank you. So to go through the audit process, first you're going to engage an audit firm. They'll go through the requirements. What do they need to perform their audit? The field work where they actually come out on site, generally speaking, and perform the audit, the testing and that sort of thing. The reporting is when they actually present the report to management and potentially either an audit committee or a finance committee, and then the follow-up and closeout. In the engagement phase, you identify what services are going to be performed. Will they do an audit? Are you asking them to do a financial review? Are they doing a compilation? Are you asking them to do other things within, beyond that? Are you asking them to file your 990? So it's really important during this phase to identify what it is that you're asking the audit firm to do. Identify where the services will be performed. Especially since COVID a few years ago, a lot of audit firms are moving to more off-site, online type audits. They work. I would caution you, if you've never been through an audit, to really push your audit firm for an on-site audit. That's my recommendation. My thought is it's really hard to develop a relationship with your audit firm if you can't sit next to them, be with them when they're asking questions and that sort of thing. You just develop a different level of relationship. But also, it's really hard to understand the process as much, especially if you haven't been through it, without really going through it it's kind of an intense process. So when you go through it with them in your space, I think you can learn a lot more from them by doing that. Some might push back, some might not do it. You know, if they're just really digging in, that's, you know, you might be stuck with that. But I would recommend, from my perspective, pushing for an on-site audit. What organizational staff do you have that are going to be involved with the audit? Is it a CFO? Is it a finance director? Maybe you outsource your bookkeeping, so you want to make sure that they're available to go through the audit with you as well. So identifying who's going to be involved. The scope of services for the auditors, again, you know, what are you asking them to do? Are you asking them to do the 990, other regulatory filings and that sort of thing? The engagement phase will certainly identify fees. So, you know, it's important to have that up front before you begin work. The start and completion date. This is very important, especially if you're working with, say, a board meeting deadline. If you know your board wants to review the audit by this point, you need to back it up to where your auditors have time to come in and do the field work and that sort of thing. But then there might be other deadlines. You're working to get a federal grant application in and you need that audit by a certain time. It's really critical that you work with your auditors in the engagement phase, not throwing it at them, you know, a month later and saying, oh, by the way, we need this in 2 weeks, because it won't happen. The planning phase then, this is where you as an organization will probably do more work than the audit firm. They should present you with a list. We need this list of documents, these things. It's a very lengthy list. I can't stress to you enough, like, be ready for that. It's lengthy. Do you have a question?
Some of our documents are an electronic version and some are in a print version. Is that okay? Is that expected by auditors?
Absolutely.
Okay. And then the second question, and forgive me if you've said it, I don't think it's been said yet. What is the average expected time to complete an audit from start to finish?
That's a great question. I can only speak from my experience with audits. So I don't know if it was said earlier. I was the CFO here for a number of years, been gone for a couple years. So my only audit experience is here at Sunflower. We had a fiscal year end of June 30th. We were working with the auditor on site usually by the end of July, early August. It would be presented to the board in October, just because that was when our board met next on a reasonable timeline. And it was closed out shortly after that. So that's my only experience. So it's about, that 4-month-ish timeline. I wouldn't suggest pushing it out too much longer, because there is such a thing as the audit fatigue, where if you're in an audit for 6 months, 8 months, you just get worn out. So does that help? Okay, perfect. So I'm going to back up to develop a timeline and deadlines, because I skipped over it and I apologize, but that goes back to, set a realistic deadline and timeline. So for example, if you want to be done by, like, say that October board meeting, or, your board meets in March or whatever, just be realistic and know that there are steps that have to happen along the way so that you're backing up, and just be realistic. During this planning phase, you may or may not have a pre-audit meeting. Again, this is going back to what staff are involved, you need to manage your expectations of the audit, including the field work. So for example, if they're on site, make sure that you're not planning the on-site field work like the week after you get back from vacation. You just won't have a good vacation if you do that, because you'll be worried about the audit. Don't plan it around board meetings, that sort of thing. So just managing the logistics of when that field work will happen. And if it's remote, the logistics here are making sure that your CPA firm has the appropriate technology in place, so that when you're sending electronic documents that you're doing so securely, because you don't want to just be emailing that. They should have a secure portal where you can upload those documents and send them in a safe way. The fieldwork phase, this is going to be the most time-extensive process for you as organization staff. The CPA firms are going to come in, they're going to do a review of your documentation. This is not an exclusive list, but they're going to ask for bank statements, and they're going to ask for 12 months of them. They're going to ask for deposits, reconciliations. They're going to review checks along the way to make sure that the check that was written for $542 matches the invoice for $542 to this organization. They're going to do that testing to make sure that you aren't doing something inappropriate or anything like that. They're going to look at grant documents, and that's everything from if you submitted an application to the grant agreement to any reports that you've submitted. They're going to do some extensive testing on that. They're going to look at what's your risk in your organization, and probably for a lot of organizations, it's the grants, because that's where a lot of money starts to flow. So are you managing those grants appropriately? They're going to look at leases, contracts. They're going to ask for a list of your fixed assets, making sure that the depreciation schedule matches that. They're going to ask for board minutes, whether that's board, any kind of committees that you have. They're going to go through those minutes and they read them. Policies, procedures, everything. It's a very, it feels invasive. It has to be to some degree, but it's a good process to go through for your organization, especially if you've never been through one. I've always considered it kind of that reset, just to make sure that everything's where it should be, and that sort of thing. We have a question.
Thank you. Can I ask about what do you believe the intent of an auditor is when reading board minutes? Is it looking for discussion and voting on financial statements, like these quarterly or maybe it's monthly, review of the statements, discussion, questions and answers about what things mean on the statements, and then voting to approve them? What might an auditor really be paying attention to in board minutes?
Sure. So that's a great question. So again, coming from the foundation perspective, they were looking at things like, what action did the board take? So did the board approve? I was here when this whole entire building was under construction, the whole process for that. So they were going through, did the board approve this? There were extensive checkpoints along the way. So that's kind of an extreme example. If you received a grant, did the board have any oversight on that? Or is the board approving, certain aspects for it. They're going to look to make sure the board's approving your budget. They're looking for things that the board should have governance type oversight on. Their job is to assess organizational risk. They're not looking at, did the board approve an extra $10 in this budget line item? So, I mean, it's kind of that big picture look to make sure that the board has approved the things that they should. And, maybe you signed a lease for new office space, but you didn't provide that lease, and that should be in your board minutes that the board's approved that, then they're just going to ask for it. Because you might forget something along the way. Like it's a 12-month look back, and you're 2 or 3 months past that, so you're thinking about what happened 15 months ago, and sometimes that's just kind of hard. So there was another question here. Oh, I'm sorry. Let's wait for the mic if you could, please. I'd appreciate it.
It was actually just based on the timeline that we're looking at. So are we looking at 12 months?
The audit should be a 12-month, whether it's calendar year, fiscal year, but it's a 12-month period.
Okay.
Yeah. Generally speaking, I mean, I guess you could engage them for a 2-year audit, but it's a year process. Great questions. Any other questions before I keep going? Terrific. So the other thing that happens during the fieldwork phase is your auditor should be talking with your management. So whether that's your CEO, executive director, they might talk to some other staff members, and they'll look them in the eye and ask them, are you aware of any fraud? They'll ask some other questions and that sort of thing, but your staff should be prepared to at least have some level of interaction potentially with an audit firm. Again, they'll go through internal control testing. They'll actually take something and say, okay, walk me through this process. What do you do if X happens? And they want you to work through each process, and then they're going to test that. Okay, if you tell me that each invoice must be initialed by the CEO or the executive director, they're going to pull a number of invoices and make sure that the executive director has initialed that. So they just want to test to make sure that if you say you're doing something, that you're actually doing it. I don't want to underestimate for you guys, this is a very time-intensive process. If you have something going on, like I said, a board meeting coming up or something like that, don't schedule the field work, because you will feel like you're just spending your entire week doing this, or the entire time that they're in your office. After this, the auditors will prepare the report. They'll review a draft, and it's really important for your staff to review that. And when I say staff, I mean like your finance staff, your CEO, executive director. Ask questions. It is really important also. I keep saying that, it's really important. Of course, audits are important, but ask questions. This is your report, and if you don't understand something, ask them. They're used to having those questions. They should be prepared to answer them. And changes can be made if needed. They're not going to change your financials, because if you had this much in revenue, that's what they're going to report. But maybe it's a footnote section or something of your audit that you're not quite comfortable with, or they haven't quite captured the true essence of something. So it's really important that you understand what's in that audit report, and knowing that you can make changes or request changes, and that's a collaborative process. They will present a management letter. This could identify possible areas for improvement. So if they say, you know what, you've got one person who's doing all these things, we really need to have a conversation about that. They're going to put that in their management letter. And this would potentially identify material weaknesses or deficiencies. Again, those can be processes and that sort of thing. After this, they're going to meet with your board. They're going to present the report. My personal opinion is that the board and the auditors, as a best practice, should meet independently. If your CEOs, your CFOs, your finance directors are generally in the board meetings, your board should have time with the auditors without staff present. This is to allow them time to ask the questions that they should be asking. How did the audit go? Was the staff forthcoming with information? Were there any issues along the way or disagreements along the way? The board should have the chance to meet with the auditors if they have recommendations for accounting policies. It's really important that the board have that time with your auditors so that there's the option for open dialogue. At the end of all of that, your board will accept the audit report. They don't approve it, but they accept it as the report that the auditors have that they've presented. So what's in an audit report? Like, I've spent all this time, I've spent all this money, now what do I get out of it? The audit opinion. The audit opinion is going to be the letter from the auditor saying that they believe that the statements are free of material weakness, or I'm sorry, material misstatements. I apologize. After that, you'll have 4 statements: the statement of financial position, otherwise known as your balance sheet, the statement of activities, or your profit and loss statement. What revenue did you have? What did you spend? The statement of functional expenses, which is a breakout of your expenses and revenue by program area. So that could be the specific programs that you operate, fundraising activity, your management general expenses, and then the statement of cash flows, which is your cash in, cash out, which is a little bit different than your functional or your statement of activities. The footnotes, I have to tell you, when I was reviewing audits for the foundation, when grantees would send in their audited financial statements, the footnotes was where I would always go first, because it tells you the story of an organization that you might not see in the financials. The financials are really important, but the footnotes were equally or more so important. What was I looking for? I was looking for things like significant changes in operations. I talk about subsequent events. The auditors are going to ask for any kind of activity that happened after your calendar year or fiscal year end until the time that they present to the board, so that 3 to 4 month time period. And they're going to say, what significant things have changed? If you lost a significant donor, if you, let's say your building caught fire and you have to cease operations for 6 months while you figure that out. Those are subsequent events that are important for someone who's reviewing your audit to understand, because it changes how they could view your potential to continue operations and or take on grant funding and that sort of thing. So it might, the footnotes might talk about a substantial change in staff. So if you've lost 4 out of your 5 staff members in a 6 month period of time, that's important to note in your financials, because it changes the outlook of the organization potentially, not necessarily, but it's those types of things that you can see in footnotes, and it just shows a more accurate picture of your organization outside of the numbers of what you're looking back on, because the financials are a look back over the last year, but sometimes these other things are very time sensitive, and you might not pick them up in the financial statements. So that's a lot. Any questions before I keep going? You guys are hanging in there well for Friday afternoon. Tips for managing an audit. Find a firm early. If you've never been through an audit process, talk to accounting firms early. So if you know that, okay, my calendar year is December 31st, I know that our board is going to start wanting an audit for this calendar year, you're probably at the point where you should be talking to firms, or maybe even a little earlier than this right now, because what are we, August? If you want to do an RFP process, that's perfectly fine. Talk to other organizations that you have a relationship with, or maybe like organizations, and just find out who they use. Find out, what their relationship is with an audit firm. Do they like them? Who have they worked with in the past that, like, hey, I would never recommend working with them because it was just a disaster. Those are important things to know as you engage with audit firms before you sign on the dotted line. Audits take time. Manage your expectations on this. Manage your staff time. If you're the CEO, the executive director, know that your staff are going to be tied up and don't have high expectations of them for 3 other projects in the same time period. So there's a question.
Do these audits need to be done yearly?
Audits, it depends. Should it be done yearly? If you're at that point where your organization is in growth, you're steadily above that 500-ish thousand range, I don't want to say yes or no. It depends on what your board's risk is. If your board says we're going to do one every 3 years and we're okay with that, there's not a rule that says you should or shouldn't. That's a hard question to answer from a yes or no. Does that help?
So what's the worst that can happen on an audit?
What's the worst that can happen?
And then how long do I have to fix it or to have that straightened up?
Well, to me, the worst that can happen is you find out like fraud, something huge, something like that. That risk should be fairly low. So I think the worst that can happen is, there are just things that you learn along the way. So there might be financial statements that aren't, maybe something got miscategorized or something like that. You fix it and you move on, you learn from it, and you know that next time I'll do it this way. The worst case scenario is fraud. Like that's a horrible situation to be in. So, another question?
Yeah. Since we're in Kansas, do you know if there's laws about the revenue that if you make a certain amount, you're required to do an audit every year, or?
So I'll answer that question by saying I'm not an attorney, I'm not a CPA, I cannot give advice on that. However, there is, and I can get your email address after this, there is a state statute that says if you have, I want to say it's around $500,000 in contributions, but I think I shouldn't answer this question, but I'll say, ask your attorney.
Yeah.
Are contributions grants and those types of funding, or are they, hey, I'm Cheryl Bean and I believe in your organization, here's $500, and all of those people add up to be $500,000? So I think it's that latter category. It's not your grants and stuff, but I'm going to ask you to check with an attorney if you're close to any of that.
Gotcha. Okay.
Great questions. Thank you. So again, just tips for managing it. Audits take time. Set appropriate schedules. Be realistic in your expectations and that sort of thing. Keep financial records in order. If you're working with an outside bookkeeping firm or CPA firm, that should be a given that they're keeping up on that as long as you're providing that information to them. Your finance directors, accounting staff should be able to keep up on those and keep financial records in order. It is pretty funny. There are a lot of things that you see over the years, like categories on statements that say, ask my accountant about this. And there might be $5,000 in that. And, you just keep your records in order. And, if you have that line item, fine. Just make sure you ask your accountant before it gets to the audit process. Make adjustments as needed, of course. After the first year, so in your first year, if you've never done an audit, it's going to be time intensive, more so than if you've been through it. Once you've been through an audit, you know that the CPA firm is going to ask for your bank statements, that they're going to ask for leases and contracts. You know that they're going to ask for all these things. So at the end of each month, just put a copy of your bank statement in your audit file. And that can be electronically or in hard copy, whatever you do within your organization. But just start setting that stuff aside, like, hey, we just signed a contract, we just signed a new lease, something along those lines. I know the auditor's going to ask for that. Put a copy over here. And then when they ask for it, you've got half the work done, potentially. Rely on your audit team. They should be your partner. They should not be coming in and, they're not coming in with a heavy hand. They're not coming in here to tell you all the things you're doing wrong. They're there to guide you through the process. So rely on them. Ask them questions. And don't be afraid of them. Like, audits are time intensive, but they're actually a really good process if you embrace the process and let it be the guidance and the education that you might need to make it the best possible audit for your organization. And just relax, keep breathing. Again, it takes time, but you'll make it. So we're a little bit ahead of schedule, but I'm happy to answer any questions.
Are the categories pretty like standard, like for the audit? Like these things get categorized as these things? Like is there a standard for that, or does it vary across organizations?
Are you talking about standards for the financial statements or?
What am I talking about? So, like, if somebody's going through the audit and they are trying to categorize where your funding is going, like, are those categories are those specific? Like, or
Are you talking about like your chart of accounts, maybe?
I don't know what that means. So sorry.
Okay, no, fair. So let me say this. Your auditors have audit standards that they must meet. Okay, so they have their standards that they have to go through these processes and check these things. Are there standards for, like, say, specific programs? Your programs might have certain levels of revenue and then expenses associated with it. So, for example, probably staff time. It could be, supplies, program-related type items. Those are not necessarily specific, or they're specific to more of an organization, but your categories are going to look different than another organization's, but there are some trends. So, for example, like in your budgets, you're going to have staff. You're going to have payroll taxes. You're going to have benefits. But the benefits you have might be different than another organization or something like that. So there's going to be differences, but there's going to be like trends. Does that?
Yeah, that does answer the question in some ways. I guess I'm worried that I'm categorizing things in the wrong areas. And I'm like, okay, what are the categories that we need to have, I
Sure.
guess, for an audit?
I think that's where I go back to ask them. Like, am I on the right track here? Some organizations say, we're going to categorize at a high level. And I keep using this category of staff. They might say, we're going to have a staff line item or a salaries. We're going to have payroll taxes, and then we're going to have benefits. Some say, that's not good enough. I want in my benefits, I want to know how much is health insurance. I want to know how much is life insurance or something like that. So every organization is going to be a little bit different. I think there's a happy medium between 32 categories and one. It's kind of a common sense approach of, the other thing about financials is, what do I want to gain from them? Like, what do I want to track? So it's going to be important for you to know that how much you spend on office supplies, it might not be. So you might lump that in with something else, like office expenses. Okay, terrific, great question. Yeah.
We are a new organization just coming up on 3 years. So if we do an audit, what can we expect to pay for something like that?
Oh, that's a great question. You're the first person that asked me, and I actually expected it 3 days ago. So I don't know that there's a solid answer on that. I think geographically might make a difference. If you're in Wichita, Kansas City, Topeka, you might pay a little bit more than maybe a smaller community. Maybe not, I don't know. I did reach out to an audit friend anticipating this question, and I said, hey, give me a sense. Like, if an organization's in that 500,000 range, they're doing their first audit, I said, what should they be looking at? And he came back with probably around 15. Now, I can't use that as a quote, but like, that's a lot of money, $15,000. Now, you might be able to get something in the 10-ish range, but if you're paying less than 10, you're probably not getting a good process. It's expensive, it's time intensive. I can't quote, I'm sorry, I can't quote for a CPA firm, but they're not inexpensive.
My follow-up question on that is, can you talk more about a financial review when maybe a full audit is, so there's not a grant that requires a full audit. Can you talk more about the circumstances where a financial review might be an appropriate tool for a nonprofit to consider and the corresponding price point?
The corresponding price point, you're probably looking at, I'm just guessing, based on a conversation I heard on a side table a couple days ago, you're probably looking at half or maybe a little bit more than half of what an audit is. Again, I'm not a CPA firm. I can't quote prices. It might be different in, Topeka versus, Liberal or something like that. I don't know. I think it's a great point of, maybe as an organization, we're a newer organization. Our board hasn't pushed for an audit, but we want some level of assurance on our financials, maybe making sure that we're categorizing expenses appropriately. Maybe, am I on the right track with some of these things? Maybe a compilation or a financial review is sufficient for your organization. The audit is going to get more into your internal controls, your daily processes, they go deep on an audit. So it's a great question, and I appreciate it, because you might want to start with a compilation or a financial review.
Hi again. What's the next question? Oh yeah, petty cash.
Sure.
So with petty cash in an audit, how do they deal with that? Because I'm wondering, with petty cash, it seems to so a lot of people use QuickBooks Online nowadays, but then if you have a petty cash system, it seems to kind of run separate and parallel. And so talk to me about petty cash, audits, how does that whole thing work?
I guess I would question, I'm not actually asking you this, but how much is your petty cash? And is it a large amount for what your organization is? Like, are we talking about $100 or are we talking about $1,000? Again, I'm not asking that question. But presumably with your petty cash, you're still taking those, like if I have a receipt for $50 because I went to, Office Max and bought supplies, you're still going to take that $50 receipt and enter it into your accounting system. And you should have the receipt for that. And then when you have to replenish your petty cash, you've got the transactions for that. You've got the withdrawal from your bank and that sort of thing. So I've seen a lot of organizations kind of get away from petty cash just because, employees are okay expensing things, a lot of things like, hey, we're going to go to Office Max, but we're going to put it on a company account or something like that. So I don't know if that answers your question, but petty cash should be a very small amount compared to your overall budget, that they shouldn't spend a lot of time there. So auditors, whether they're doing a full audit, a compilation, whatever, they should be looking at where's your risk. So again, going back to the foundation, our auditor spent time on grants and our investments. That's where the bulk of our stuff was. Did they look at our leases and our contracts? Yes. Did they look at our board minutes? Absolutely. They did the testing and that sort of thing, but a chunk of their time, and a significant chunk of it, was, you've got this portfolio, so we're going to test and test and test on the investment transactions, and then we're going to look at the grants. So did your board say that you're going to do a grant for $10,000 to this organization? Did that actually happen? Those types of things. So they should be looking at where your organization risk is. But that's a great question. We have a question here.
So preparing for those questions of where the risks are there resources that you would recommend? Like we're right at the cusp of that $500,000. So we think a year from now we're going to do an audit, right? So preparing for that, what would you recommend? And we have outsourced, bookkeeping and that kind of stuff.
If you have outsourced bookkeeping, you're in good hands. I mean, you should be, right? As long as you're with a trusted bookkeeper, you're in good hands with that. The records should be up to date. They should be handling transactions regularly and appropriately and that sort of thing. It's great that you know that you're a year out. Start talking to like organizations. Just, kind of feel what their pain points were. Ask organizations, hey, what were some of the things that you wish you knew before you started your first audit? But I can't stress enough how important it is to talk to firms early as well. My experience is audit firms are not begging for work. They're busy. There's a national shortage on CPAs coming out of business schools. They're busy. So take the time early to interview them, go through an RFP process, but really talk to peers as well. And you're in a great time because you've got time to do that.
Well, and so just to follow up on that, one of our CPAs on the board has said we can do, it doesn't mean we have to do just put an RFP out just for Kansas, right? So we can do national,
Sure.
Do you have any recommendations or resources for?
If you have a CPA on your board, that's probably a better source of information than I could ever provide.
Okay.
We did have somebody in another session that said they worked with a firm. I kind of want to say it was Denver maybe or something, but they do a lot of work just nationally and they do remote audits. If your organization is at a point where you can say a remote audit is okay, and I'm never going to meet my auditors except on Zoom, if you're good with that, there's no reason you can't use any firm located within the United States. So, any other questions? Or you guys have been a great group. These are great questions, especially on a Friday afternoon. I appreciate it.
All right. Well, if there are no further questions, please join me in thanking Cheryl for her time.